All right, I think I am live. My apologies. I had a phone call that lasted a little bit longer than expected today, and one of my one-on-one coaching students, and we were going over some of the trades that, well, actually, the I wished I would have taken more today, but I was able to capture $1,000 on the trading day, so I felt like I went from red to green or black today. So I'm back in black. So that's kind of cool on that side. Hi, hi. I've been crazy busy. This over from Thursday being Thanksgiving. Happy Thanksgiving. Since last time we talked, we've had Thanksgiving in America. We've went to Black Friday, which was absolutely insane. I was up raking at that point. And I got two individuals take advantage, or actually three take advantage, but one had to drop out. So that's another story for another time. So I guess that's what I mean by that is there's one opening in the coaching at this point. So I'll talk about that later. But we had, anyway, so I sold out on Friday, which is really awesome because I was up raking. And we raked up, like, I think it was like 30 something bags of leaves. Let me find it on, well, I'll post it a little bit on Facebook. Anyway, my boys were up there and we helped, and my brother was up there, and we have two, well, we have a camp, and then we have a bunch of trees. And they let the leaves go. And if you know anywhere, I'm in Western Pennsylvania, by the way, outside of Greensburg, but our camp's up at Slippery Rock, really close to Slippery Rock University, if you know where that is. It's kind of funny, right next to the creek they call Slippery Rock. They could have easily called it Slimy Pebble, right? So let me enable the chat, and I'll enable the Q&A in a little bit. I think I've enabled the chat now. And let me enable the Q&A. So hold on a second. All right, so my apologies. Usually I'm ready to go and things are moving, and today was kind of a hectic, a crazy trading day today. If you watched any of the markets today, I don't particularly care why they report or why a market moves. I just want to have a plan if it does move. And today, you know, and we're going to talk about that when we get to the PowerPoint presentation, kind of the bonuses that we give out as part of the members section in the members area. Anyway, is there any questions from the previous courses up to this point? You know, we've covered, in the last 3 sessions, we've covered price action. We went over the candlesticks, and we went over the bar charts. So we started with bar charts. We worked our way, we worked our way to candlesticks, and then we handled trends, and then we handled waves, and today we're going to handle support and resistance. So is there any questions at all right now before we get started? Hi. Yeah, things are going pretty good. I went from red to black today, so that's always good. I got 2 days left in the FTP right now to get myself back to funded trader, and I knew I could have done it today with well, not know it. I didn't know. I took a shot. At the inventory trade, I took a shot after there was a report that came out. We're gonna look at the trade. Maybe we'll take some time and look at the trade setup today. I put one of the trading tips that went in there. One of your bonuses, the futures day trading tips, goes over how to trade the event. But I traded the event. I went in after the inventory trade. My son's sick at home, so I had to take care of him as well. And I wasn't able to take advantage of the afternoon session. Normally, this would have been a day that I would have pretty much stayed at the computer the whole day and tried to see how much money I could pull out of the market, because you don't get these kind of days very often. And when they do come, you want to try to take advantage of them. But the other side of this is that I went from down almost $800 to up over 300 and something, almost 400. I got really close to getting 500. It was moving really quick. And when I flattened, it was at like 400 and something, then it was at 300 something. But I'm within 30 ticks, I think, of the profit target, which is $300, which is a very easy, doable goal, and I have 2 trading days to do it in. So, and I have up to the 16th of December to get it done. So let me see. Do I have any questions? Let me look here. I don't see anything right now. What I want to do is I got a short PowerPoint that I want to go over, and then we're going to go from the PowerPoint to the charts. So my apologies again for running a little bit late today, but it was a fun trading day. Today is those days that, you know, it's trading can be so boring, and being in your own. I'm in my home office right now. If you look around here, I mean, this is it. This is my home office. There's my board that I'm working on, a whiteboard right there. 3 laws of day trading success. It's actually, you'll probably see that pretty soon on the next whiteboard. Right back there, I get question about that. That's my vision board with my kids put stuff on it, and then I put stuff on it. So that's actually my vision board back there. People ask me what that is. That's my vision board. And obviously this is my light and sound system, and there's my telescope back there. And I'm actually budgeting to get a new light system. So someday, goals, right? Christmas goals. Well, anyway, I told my wife about it. And there's my little Christmas tree right there. My wife put that up there. There's my Christmas tree. And here's my Tennessee hat, smoky gray Tennessee hat that and my Top Step Trader that they sent me when I passed the went funded and stuff. So I got some cool things. And then you see my books back here that I've put some of my most important books in this front. So when you're looking and people look at my videos, I have those in there, and that's some of my most important trading books right there. So if you want me to go over that someday, just ask me. All right. Lots to do. Little bit of time. I have a conference call at 4:30 today, which is an hour 15 minutes. I want to go to roughly this live session will probably go for about an hour is what I'm assuming from when I start to when I end. In the meantime, if you have any questions, feel free to ask along the way. I'll get to the questions in the Q&A session after the presentation I want to put together. So what I want to do right now is share my screen, and we want to go over the presentation that I've put together for you. If I can, where's my PowerPoint? My whole computer. And top it off, my computer decided to shut down for a while today. That was an awful lot of fun. So let me find this PowerPoint. Let me bring it up, and then I'll share my screen. All right, I think I'm ready. Share screen. I'm still learning how to use all this. This is webinars and on air, and what I like about webinars on air, by the way, is that it records to YouTube, which, if you know anything, I love YouTube. So YouTube is an awesome tool. And I know there's all kinds of cool things. I'm trying to learn Periscope right now, by the way. But by the way, the older I get, the more I kind of just slam my words together. I don't know if anyone else does that, but you know, my math skills are phenomenal, but my speaking skills are lacking. Trust me. All right, so let me share this screen, and I need to present to everyone. And let me hide that right there. And you should be able to see my screen. Can you? Okay, it looks like you can see it and you can hear me. Good. All right. So this is the Futures Day Trading Beginners course, lesson number 4 today. We're going to handle support and resistance plus some bonuses. Once again, my name's Dave Knight at 123 Day Trade. So support and resistance. Today we're going to talk about major support and resistance, minor support and resistance, the pivot point, S1, S2, R1, R2, and the bonuses. 1, 2, 3 day trade bonuses. futures beginning course, 4 lessons. So if you go through the member section of our website, I should say my website. I say our, but it's just my wife and I and my boys that help me do things. So it's pretty much in-house family thing. So when I say our, it's my family, and well, my brother occasionally helps me out, and I have another brother that helps on the business side because he has all the titles behind his name: MBA, CPA, and all that happy stuff. But anyway, so the trading stuff is me. So the futures beginning course, 4 lessons, that is in the member section. It's in the top left. Basically, when you sign up into the member section, anything going down the left-hand column is at no cost. The middle column may or may not be at cost, may be a cost, and then the far right column has not been loaded in yet. The far right column, the advanced courses, by the way, the intermediate course is going to be starting the 2nd week of January. And the advanced course, right now, I'm scheduling that in 1st or 2nd week of March. So that's kind of how things are breaking down. So when you go in the member section and you see futures day trading beginners course, the next one over is intermediate, starting 2nd week of January. And the one after that is the advanced course, which will be starting the 1st or 2nd week of March. That's tentative schedules right now. This is my last live course of the year. And of course, with the exception of doing the one-on-one day trading coaching that I'll talk about a little bit later on in this presentation. Top 10 trading maxims. I put that out there again. That was, believe it or not, that was one of the most actually it was the most downloaded item that I had in my past. You looking back at 2011, if you watched that last video I put together in 2011, that was the most downloaded item that I had. Now behind that rules is a whole series of if this happens, then that happens. Now that's going to be probably a $7 tripwire. They call it tripwire. I'm with a marketing coach, and I really don't have control of my pricing right now. They're pretty much telling me what I've got to price. What we're changing the funnel around, by the way. So if you want to get into our monthly subscription and membership, I would recommend that you do it before the end of this week, no later than next week, because that's going bye-bye and it's going to be increased in price coming into next year. So right now that membership is $37 a month. I'm not pushing anybody into it. I mean, I don't, if you do, you do. If you don't, you don't. No big deal. I'm just telling you that that's getting repriced because my the internet marketing side, I don't do the internet marketing. That is from my coach. I have a coach. I have a coach as well. So not only am I a coach, I'm being coached. I don't know if that makes sense to you, but you know, I'm seeking help. So basically all my money that I make in 1, 2, 3 day trade is being funneled to my coach, which kind of sucks, but hey, it is what it is right now. That's what it's being funneled up there so that I can learn and be a better presenter and learn different things that I need to learn to help the student body that's out there, because there's a lot of misinformation, and people have begged me for about 3 years of my life to come back. And in 2011, the maxims, I put that together. The futures day trading tip series, that is a brand new course that I've put out. There's actually 8 trading tips in there in the members area right now. The 8th one being well, the 8th one will be uploaded will be uploaded today into it. There's 7 in there now, and the one that we're going to go over, trade the event, that happened today, and the video is being processed, and I'm going to put that up into the member section as well. So the futures day trading tips, you'll see that in there. E-mini bull bearish strategy, that's always been free and will always stay free. So I won't charge for that. That's on the left-hand side going down. That was the very first mini course I put together on the internet back in 2009. So the top 10 trading maxims, this is that. I've actually designed that cover, by the way. The report is just it's a sheet plus 10 trading rules, really broken down into how I approach a trade and what I'm looking for. And it's actually one of those things that was most downloaded, I should say, not most requested, but it was the most downloaded item that was on my website back in 2011, 2012 when I had it out, and then I updated it to incorporate the new trading strategy that I use called a CL Power, or crude oil power, which is the core course right now, by the way. Things are changing and moving around, but the core course is staying the same. The CL Power is the core course, and I have been, they call it splintering off different components of the strategy and making, like, I guess they call it tripwires for lack of a better way of calling it. So to pique someone's interest. But the main strategy that I trade and I coach on is called CL Power. And that's what we go over in the strategy itself, what I'm working with my students. All right, so this is what happened today. This is just a quick little tidbit on the futures day trading tips. This is tip number 8, trade the event. There is a 6-minute video that I shot today, and in fact, it's on the blog post. It's the same on the blog post right now as the trading tip until I upload it into the member section in the right place. You can just go to the blog and see it there. So just so you know that you can find it there. So trade the event. I was able to get short at 41.78, and I was out in less than a minute at 41. I think it was 41.22 today. 41.79 entered, 41.22 exit. 57 ticks by 2 contracts, 114 ticks in a minute, 60 seconds and change. And I was in and out. The whole event was about 3 or 4 minutes total. It moved up. I tried to get in at one place. It didn't work. I tried another place. That one did get, well, it didn't work. It just didn't, it didn't fill. So it moved beyond. I canceled the open order, and then I was able to short it. And I explained that in the tip series, why and what I saw and why I went at it and how I went and attacked that trade. So the tip series is something that is out there right now for you. So just go in the member section and you'll see the top 10 trading tips that I've put together. So support and resistance, yeah, let's go to the charts. So let's get over to the charts. Let me pull up what I need to see here. Where are you? Okay. So where's my spreadsheet? Let me get that up there. So you can see today, this was today's trading. Now I'm in FTP. It's a sim account, so it gets me. At Top Step Trader, you have to go through a combine, through the funded trader preparation, and then they put you into trading real money. So I'm still in that process. This was the trade. It looks like right there. I sold 2 at 41.79, covered at 41.22, and the other trades were me trying to get long in the inventory trade, and one took a loss of 11 ticks, I believe, 10 ticks, excuse me, 92 to 82, and the second one was a break even, 2 longs, and then I had a short. So I sold 2 at one, and then looking at today's trade, you know, it looked like, wow, I wanted to get short. This was the movement that you saw at the after the market, the inventory trade came out, the crude oil inventory came out. This was the area that came prior to it on the 50. This is a 15-minute chart we're looking at right now. So this right here, this was the move that happened, and it might be easier to see in a 5-minute chart. Let's go back and look at, here's the 5-minute area. You can see where the X's and O's and all that, where this is where I sold and this is where I covered. I bought here, and then it stopped me out right there, just barely. And then I bought again. It went up, and then it took me out right through here. And I really debated very seriously about selling right here. And then I would have been able maybe hold this one in for a long time. So hindsight's always 20/20. You're always right in hindsight. I didn't want to give up any more of my gains. I was black on the day. I wanted to stay black, and I wanted to keep my trade above 1,000, my profit loss above 1,000, and my net profit loss above 1,000 as well. So I knew if I took one more trade, I'd blow that underneath 1,000. And I took some shots at it, and I lost 10 ticks, and I just, I thought, you know what, today was a gift in that sense, that I was ready for it. I talked about it, and if you will go see day trading number, FTP TST or TST FTP day 7, on that video, that 22-minute video, I talk about what I'm looking for. And you'll see that my plan was exactly what I was looking for. So if you go and you can timestamp it, and you can sit there and you can say, am I lying? Well, you can go timestamp it and look at it yourself. I believe that you will find that if you go back through the blog, that I told you exactly what I was looking for. I found it, and I took it. I went for it, and better or worse, and I talked about it. It worked out today, and I was able to go into the black. So that was the reason behind it. So support and resistance. Let's get to the daily chart, because this is where we need to go. As a day trader, the thing that you want to look at, and what I'm going to take off the pivot points for now. Let me get rid of the pivot point study, and we'll put it back on the charts in just a minute. The pivot point really doesn't work so great on the day chart, because it's just it just slams it together on the T4 platform. So as a review, we covered trends, and we talked about the trend, the daily trend being down. Excuse me for a second. And then we talked about waves, and we talked about how you can price forecast out the waves based upon the Fibonacci extension. We talked about Ralph Nelson Elliott, and we talked about Gann a little bit, and we talked about Wyckoff a little bit, and we talked about some of the masters that I believe in, like Jesse Livermore. I kind of want to talk about him a little bit today, just briefly. Jesse Livermore, I think his best quote that he has is the quote that he talks about money. And when he talks about trading money, he said the only safe money in trading is money that you pull out of the account and you put in the bank. And he would say put it in the safe deposit box. But I would tell you put it under the mattress or invest in silver. Buy silver coins. That's what I like to do with some of my extra money. Buy some silver and put it away. So, having a plan, that's the only safe money that you have, is money that you pull out of the market. So any money that's in the market is at risk. So Jesse Livermore would say that that's money at risk, and therefore, no matter what your account says, it doesn't really matter, because anything in your account's at risk. It's only until you pull that money out that it's not at risk anymore. So, and his theory was, if you would make, say, you'd make a $2,000 gain, you'd pull out half of that gain. So you would pull, 2,000. You had this event, you got 2,000. You pull out 1,000, and then that's kind of where that vision board came in. You have to have a plan of how to spend your money, and half of that money, half of that half needs to be put away, by the way, and for a rainy day. So of the $1,000 that you would pull out and you would actually have, my plan is that you put $500 away, and this is kind of a coaching point, for free, another golden nugget that I threw out there for you. If, for instance, this is the way I look at it, and I won't tell you what I buy with it, but let's say that I had a $10,000 gain, all right, which I've done in my past on many different occasions. I have a $10,000 gain. What I'll do is I'll pull $5,000 of that money out. Of that $5,000, I'm going to segregate out that money into two halves. One half of that money's got to be put away to go back into the account if I need it. So $2,500 of that money is just sitting there in case I would pull my account from the 5,000 down, 2,500 drawdown. Then I've got that $2,500 to put back in there to bring that account back up to where it was, right? So that's the plan with putting half of the half away. So you have $10,000 gain, you take 5,000 out, you take 2,500 of that money and you put it and you sock it away and you don't spend it. I would recommend Capital One to put your money at right now, because they have an online cool feature that you can just throw it and take some time, get that money from Capital One back to your bank account. So, you know, what the point is you got to make it a little bit harder to get to that money. So that's what I would recommend. You got to make it a little bit harder to get to the money that you set aside. So kind of like that emergency fund or whatever you want to call it. The other $2,500 is whatever you need to do with it. So in that case, you know, maybe you want to buy a new TV, or your wife needs this, or you need a new dishwasher. You know, right now, you know, I'm thinking about our hot water tank. It's kind of getting on the fritz right now, you know. So, you know, that hot water tank, and my boys need, they need, but they don't really need, they want, right? So that's kind of the theory behind why you have the money the way it's. But anyway, so that's not something I learned. That's something I learned from reading and studying Jesse Livermore and what he did, and I applied what he did into my life. So if that helps you, then great. All right, so support and resistance. Major support is always looking back at the daily chart, and it's as far as your eye can see on your biggest screen. So as we can see major support, and I'm going to draw a horizontal line. So on your biggest screen that you got on your computer, and so if you have more than one, and I would recommend having a pretty big screen for your trading computers. So, and I would recommend at least 2 screens, by the way. Most computers come with 2 screens now. So, and they're always got an extra port in the back that you can hook into another one. So I would recommend a minimum of 2 screens as your trading station. So here is major resistance up here. If I called it support, my apologies. This is major resistance. And as far as your eye can see, going for the major resistance, major support, I can't even think what I'm thinking right now. And I'm going to draw a horizontal line on the chart here. So as a day trader, what you're looking for, and let me get the arrow out just so in case it's not seen as well. Right here on the day chart, this is major resistance, and right here is major support. And this is what we look at as you're looking as a day trader, and it's specifically as a day trader. Now we can go and you can go look at the week, you can look at the month, you can look at the year, you can look at it whatever you want, but it's really irrelevant to look anything further back than the daily chart as a day trader. And let me tell you why. Because the day trader is only looking at what time period, the day, right? So it's kind of senseless to look any further back. I mean, it's cool to look back and, you know, and to review it, but as far as your trading decisions go, the furthest that you want to look back, and this is, I say this over and over and over again, the furthest that you want to look back is your day. You never want to look back any further than the day. Actually, okay. So we're right here, and right now you can see the day. Now this is January's contract that we're looking. This is the active contract of January 2016, and the contract high, and also the cumulative contract, or the futures contract in the continuous contract, not cumulative. The continuous contract in the futures, it shows a high right here as far as my eye can see on my charts on my biggest screen. Shows it at what is that, 62.52? No, excuse me, 62.58. So at 62.58 is the highest high that I can see, and the lowest low is down here, right? The lowest low is down here, and that shows you where is that at? 37.75, which we're closing in on it, right? Now, one of the cool tools that you can use on the daily chart, we use the Fibonacci extension with the waves and wave count and price forecasting. The Fibonacci retracement is a really cool tool to use on your daily chart to see where the Fibonacci's are going to come back to. And I don't trade Fibonacci's for the most part. but I want to know where they are because they can be major areas of support or major areas of resistance. And you can see just by us putting this Fibonacci onto the chart, we can see something, and hopefully you see it just like I do. Right here, right here, and there's one more area. Do you see it? Right there. Do you know what this technical pattern is? Anybody want to tell me what this technical pattern is? I've got the three arrows out. You want to write it down and answer? I'll give you a minute. Do I have a poll? No, I don't want to do that on a poll. So let me give you another 10 seconds. We've got a couple correct answers here. Anybody else want to take a shot at this? What technical chart pattern is this right now showing? Yes, that's correct. The answer is the head and shoulders, correct? And if we actually would draw the head and shoulders out here, you can see it. So here's our head. This is the break line, right? So I would say the break line's right there with the body. So if balls break out here, and then you see the breakout of the line right through here. So we have the head up here. We have our shoulder on this side, and we have our shoulder on this side. And then we see our break line here, and now we're underneath this. And this is just a daily pattern that you're seeing. You obviously, you'd want to do more with it, but that is just a simple technical pattern that shows up over and over in a downtrend, or in an uptrend. It would be a reverse head and shoulders pattern that you'll be looking at. So let me get rid of some of these arrows and get rid of them. So we've used our Fibonacci extension, and now all of a sudden we know where 50% is. So 50% was 50-20. And you can see, looking back on October 9th of 2015, we briefly go over the 50%. We touch the 200 bar line on the daily chart, and then we close under. Now, let me ask you this. Is this move going up to here, is this an uptrend? Is this a downtrend? Is this a counter trend? Which of those three things was this movement from August 24th through October 9th? Was it an uptrend, or was it a counter trend? Excuse me, not a downtrend. Was it an uptrend or downtrend? What would you say it is? Go ahead and answer in the chat box, and or send it through the Q&A. Excuse me. That's right. No, it's not an uptrend. It's a counter trend, right? Because the downtrend on the daily chart, it trends once again. The trend itself on the daily chart tells us what our trend is. So we are in a downtrend on the daily chart. This is a counter to the trend, right? So the uptrend going up to October 9th. So basically the movement from August 25th of 2015 through October 9th of 2015 was a counter trend, not an uptrend. So that's because the trend itself is down. So the downtrend is the trend, and the counter trend would be a counter to the downtrend. So the uptrend in this case, or going on the up, is really called a counter trend to the trend. Hopefully that makes sense as we're reviewing all this information. So now that we know what major support is and major resistance, what's minor support and what's minor resistance? I'm gonna get rid of the Fibonacci right now because we don't need that right this second. And I'm gonna get rid of some of my arrows here, and we'll get rid of them. And let's go ahead. Let's leave the major support and major resistance. So we can see this channel. Hopefully you can see this channel right here. What you're looking for on the channel or what you look for in minor support and minor resistance, is the last area on the chart has a congestion. So if we can see the congestion period right here, and then obviously we can see it broke out of this congestion just recently, and then it tried to come up a little bit, and then it broke down a little bit further today. So, but minor resistance, looking back, would be roughly in this area where the body is. Here's your body going through here. And then minor support would be right in this area, right through here. So this is kind of the eye of the whole beholder, though, in that sense. But what I like to do is take a look at the body. So I want to see what's the body of the candlestick telling me. I'm not really concerned with the shadow part of it. It's kind of interesting to see, but the interesting point was that there was interest in between the open and the close of the body. So as I look at minor support and minor resistance, I'm looking at the area that's in between the body. And right now you can see this particular support and resistance. We went up to this resistance area in 2 trading days, and we came back down to support in 1 day. Now, we would not know this is the minor support and resistance off of these 2 trading days. It establishes itself in the congestion area, right? We would say, and what would be the minor support and minor resistance before this? Up here? Yes, right up here. This is your prior minor support and minor resistance until it broke out and went down. So let me get the arrows so you can see the minor. So this is minor resistance. And this below, that diagonal line below, is minor support. Now basically, as you look at minor resistance and minor support, you basically have been taught to buy above, sell below. That's the way you look at the resistance line, or a breakout trader is what they're looking at. And I believe in that as well. And if I was more of a positional trader on the daily chart, I would be looking to get long above the resistance line, and I'd be looking to get short below the support line. And I would be looking to go as a positional trader, I'd be looking to look for a bounce off support like here and here, or a bounce. We wouldn't know this is a bounce off resistance right now, but we know this would be a bounce off resistance here, going down to support, a bounce off of resistance again, going down to support. So right now you can see several different trading opportunities just based upon minor support and minor resistance. So the first one would come in right here on September 2nd. And if you're Jack B. Nimble, you also see on September 3rd that you could have wrote it back down to September 10th. And then on September 15th, going up through here, and then riding it back down through September 24th. And then roughly around September 29th, going back up, and then coming back down on October 12th, down, false, kind of a false one here. And then again, October 19th, going down, and then going back up and going back down. So you can see a congestion area, how you can play the inside bands, I guess. And this is kind of a positional trader, or more like a swing trader, looking at a 2 or a 3 or a week different period of time. That as I would be looking at swing trading and positional trading, and meaning that I'm planning on holding my contract longer than a day, then I'm looking at the minor support and minor resistance off of this. So I would be a seller below and a buyer above, and a reverse of the resistance. I'd be a buyer above and a seller below. So I would want to see a close below on whatever time period that I'm trading. Now, I wouldn't say that you'd have to take a trade off the daily chart, but that would be, if I'm a positional trader, then yes, I'm going to be using my daily chart to make my decisions based upon where I want to be in the market. If I am a swing trader, then maybe I'm looking at an hourly chart or a 15-minute chart or some period in between there. I wouldn't recommend anything lower than a 15-minute chart. But as a swing trader, I'm looking at a chart that might be a little bit smaller or lower, kind of as we call coming down or moving yourself down. How's that called? Drilling down. That's what I call it. Drilling down to the next chart. So this is your minor areas of support and resistance. Now, the pivot point really isn't of much help on the daily chart as it relates to the T4 platform. Where it comes into help, I need to get rid of some of my arrows. Where it comes into help is at the hourly and below. And what I want to do is get rid of some of this area here. And then I want to change my chart setting to an hour. And then I want to add back in my study. So now I want to add back in. Now we're looking at an hour of worth of data going back. It looks like we can look back to November 22nd. So right now we're looking back to last 22nd of November was, when was that? That was Sunday night. So Sunday night coming into Monday the 23rd into today being Wednesday, December 2nd. This is the first chart that I would pay attention and be looking at the pivot point study. So what I need to do is add a study. Let me just see which button I need to click here. So I want to add a study and I want the pivot point. So in mine, I just add the pivot points and I just say add. And it's nothing special. It's just the pivot point study. And I like to see it a little bit. I'm going to take the properties and I'm going to get the line thickness a little bit brighter. Whoops, not that one. Let me find the pivot point study and I'll do that one. Line thickness, here we go. All right, that looks pretty good. All right, so here we go. The pivot point is well, I'm not going to get into calculations of the pivot point and the support and resistance. That's covered, and you probably already know that. Most people already know all these calcs, and we don't really need to get into the calcs of but the pivot point in the futures day trading tips, I talk about the magnetism of the pivot point. And if we look back at minor, actually, I do want to put minor support and minor resistance on the charts. So let me go back to the daily chart and let me put in, well, it's not really going to matter. It's up here. So never mind. We don't need it. If it were in the congestion area, then the minor support and the minor resistance would be good to know. What could be a possible bounce area. Excuse me, I'm just about lost my voice. My apologies. So pivot is a magnet, and you can see just looking at this magnet that we were trading at it today. Now the pivot point changes every day, so when you're looking back at it, it's not as helpful on like this hourly chart as it would be helpful on like a 5-minute or 15-minute chart or the tick chart that I like to trade off of. So we can see that right here at 2 a.m. at all of yesterday pretty much, and the pivot point yesterday was at it's pretty close to where we were today. Let me see. Let me just go back and look where the pivot point was yesterday so I can tell you. Okay, the pivot point yesterday was 41.93. So pretty close to where we are trading right now. So we can see that yesterday this blue line would be up here at 41.93, right in this area. And then the day prior to that, Monday, wait, I didn't trade did I trade the first? No, I didn't trade the 30th, so I don't have the pivot point on the 30th. But I would assume that it would be somewhere in this area right through here as well. So the pivot point is the strongest point when it's at it, meaning that you can see it right now, right here at the 93 level yesterday. So right here at 93, you can see that we traded at that 93 level for quite a long time, back and forth to it. We went down, we came back to it, we went up, we came back to it. So it's a magnet. And until it breaks away from it, it will keep attracting it back to it. So if there is no momentum move, and today we can see that momentum move, right? A breakaway from the pivot point. And by the way, today's low off the trading charts, if we would have taken in and been able to capture today's low at 39.83, my low on 12p today was 39.55. So taking in today's open of 41.69, it made a move down to a 10p down move to 39.91. If you could have captured in the open to a 10p move today, that would have been 178 ticks, by the way. So basically from the open here down was worth 178 ticks on a 10p down move today. We can see it would have been a little bit hard to hold on to though, because right through here, this bar right here comes down and up, and this was the event, right? The event trade that moves it above here. So it would have been a little hairy holding it today into 41.69, holding this all the way down. So you probably wouldn't have been able to capture a little bit, and then it would have stopped you out, and then you would have captured maybe a little bit more, or maybe you got nothing. So that's why, you know, as a positional trader, you're not really worrying about the noise of what this market did right here, because you have sold in maybe over here, back here, and somewhere down in this area. And maybe it did take you back and run you out of the market. I don't know. You know, as a positional trader, you could be run out of it based upon your own execution plan that you put together. Decide to make your own trading plan that you put together. As a day trader, I know what I'm looking for. I know how far I want to risk. I have it all laid out in front of me on my spreadsheet, and I use that spreadsheet to religiously to help me decide where I want to be in any given trade. So the pivot is the strongest point on the chart. Now, what would you think would be the next most important point as a day trader? And we want to drill this down now. And we're going to start looking at charts that you need to start looking at as day traders now. So now we're looking at a chart that you should be looking at, your 15-minute chart. You should be looking at the daily chart, you know, maybe once, twice a week, unless you know you broke out of an area like today, and now you need to readjust where that price action is going, right? But once you know the congestion area and what you're looking for, then you don't really need to be looking back at the daily or the hourly, but the first chart that you need to be looking at every day and have on your trading station up and running at all times, I believe, humbly, you need to have your 15-minute and you need to have your 5-minute chart up and running at all times. And then personally, I think I like trading off a tick chart, and we'll bring in the tick chart in just a minute. So now we see that the pivot point, we can see it hung out at pivot roughly from the day being open of yesterday at 5 o'clock, December 1st, all the way through it breaking through and down at 2:30 in the morning. And then we have our event that drives it right up through the pivot point, up through this yellow line, which is settlement, up through the 50 bar and the 200 bar. It goes as high and over a minor resistance area as well, and it busts through all of this, trapping out, and basically this move trapped a bunch of shorts is what this move did. It trapped a bunch of shorts, and then they were able to capitalize on this, and then they took advantage of it and they drove it down. And if you watch once again the futures day trading tips, then I talk about why and how I approach this trading the event. So So the next area that is of significance as a day trader is S1 and R1. Now S1 stands for support 1, and R1 stands for resistance 1, and it's a standard deviation move off of the pivot point. So it's basically one standard deviation move. For a lack of better way of putting it, just think about a standard deviation as a statistical term, and this is a one standard deviation move, and this S2 is like two standard deviation moves, so forth and so on as you move down S3, S4, like R3, R4. That's the easiest way to explain it. So you learned it in school, you're actually applying something that you learned. So the pivot points take advantage of that. And as we know, the market stays inside a non-trading range roughly 85% of the time. It's only the 15% that the real big money's made. And you can see today is a beautiful day of how it drove through not only the pivot point, but it drove through S1 and S2, and it looks like it's closing below here on today, being the 2nd of December. Looks like we're going to close underneath the S2, and then tomorrow's pivot point will be recalced out and put out here. So each given trading day, you want to know where are these support and resistance areas. So this is our 5-minute chart drilling down. So now we see the 5-minute area, and we're drilled down to the 5 minutes. Now we can see this event a little bit clearer, but not as clear as we can see it on the tick chart that I'm going to show you in just a few minutes. So now we can see that within 5 minutes period of time, the bar opens here. Excuse me, no, it opens here. It comes down just to here. It goes all the way up here, and it closes right here. And this all happens within 5 minutes. This is the kind of plan that I believe that you can plan for if you know what you're doing. And I call it trade the event. And it's kind of cool that it happened today, being the last day of our beginner's course. But you can see that this, if you could take advantage, if you could have sold here at 41.97 and it bought it back at 39.84. So what did I say? 41.97. 41.97. And if you could have bought it back at the low at 39.84, that was a move of $2.13 or $2,130 for every one contract. So that's the range. Now, obviously, you're not going to be able to capitalize on this whole move. It just, unless you're extremely lucky and you really know the inside. But that's kind of the opportunity cost or opportunity area that's involved in the particular trade, right? There a possible profit area of 213 ticks from the high to the low. So as a support and resistance, you can see that if support, and maybe you've heard this before, right? Prior support becomes now's resistance, and resistance becomes support. So as you trade to a level, and you can see this represented here on the 5-minute chart, we can see that we traded down to our first line of support, S1, and our support stayed support for a while, and then all of a sudden it dropped through it. Now, as it drops through in this area right through here, support becomes resistance. Now it's a good point to be looking back that, hey, it might be a nice area if you're going counter trade or counter trend to make a trade up to it, perhaps, or looking to sell underneath it and driving it underneath, or a bounce off of S1 going back up to the pivot and up and beyond, like this trade right here going up. So the S1, S2, S2 is a strong component. If it breaks through S2, you really don't know how far the market's going to drop below S2 in any given day. Those are when you get your big, nice, big moves. When you can get a market that wants to go down from pivot, down through S1, down through S2, those are just days that make your trading account. These are beautiful trading days. These are the days that only happen, I would say, less than 7 to 8% of the time that you're in a trading. So having a plan to capitalize on big movements like this is what I do as a day trader. I don't like, I was talking to a guy today, and we were sharing in Top Step Trader. He was already at 34 trades. That makes me nervous. 34 trades he was at that point in time, and I was sitting at 4 and I was done for my day. And he says that that was just light trading right now. Can you imagine that many trades? I can't. I know that if I could scalp like that, then wonderful. I would be so frizzled and just so messed up that I wouldn't know what I was doing. I would be so, I just would be, my mind, whenever I have more than 7 trades in any given day, it's not normally a very good day for me. So when you look at my trading reports, when you see me getting up over 4 or 5 trades, those are not very good trading days for me for the most part. So, and that's one of the cool things I like about Top Step Trader, by the way, is that max daily loss keeps me honest. And if you know anything about my past, you know that I have my nervous breakdown and all that cool things that went on, and such a pain in the ass. But you know, the good news is that I had all this time to think about what I wanted to do. And when I did come back, I came back with my guns blazing. I came back healthier. I came back in a lot of different ways, a lot better. And as you say, or as you say, as I say, or as it's been said by a very wise person, like there's nothing new under the sun. That doesn't kill you makes you stronger. So the nervous breakdown, all that stuff, the fake heart attack that I thought I was having a heart attack, didn't kill me, but it made me stronger. It woke me up. I started dropping weight seriously. I mean, I pushed up to 310 pounds at my heaviest, and I didn't look it, but I was there. I mean, my gut was so freaking big. I was like, what am I doing? I'm not going to see my kids graduate high school. At least I'm not giving myself a good chance of watching my kids graduate. So I started taking care of the plates that I could take care of. You know, I set trading aside. I set live day trading. I set aside the live day trading room. I set aside things that I wanted to de-stress my life. And sometimes I guess that's the good point, is that those things that don't kill you make you stronger. So I come back and I come back stronger. My plan becomes stronger. I know exactly what I'm looking for in any given trading day. And I'm quite confident in any given trading day that as long as I follow my trading plan, as long as in this case, as long as I follow the beginning course material that I just went through with you, if I follow the basics, and this basic stuff is really the fundamentals of trading. When you're looking at trends, when you're looking at price action, when you're looking at wave count and wave theory, and when you're looking at support and resistance, this is all just fundamentals of trading. This isn't anything new. It's just how do you apply it into your own trading? Like everybody applies it differently. This is how I apply it. Now, so let's drill it down to our tick chart with the last minute of time that we have available here. And I appreciate you guys sticking around today. Today is kind of a cool day. It doesn't happen very often. I got to find it first. It's my only black chart, and you know it takes me forever to find it, right? All right. So here we go. Here's my tick chart. Let's go back to the event. Let me give you a little golden nugget today because you're here. The inventory report came out today, right? And I didn't know about that until I started looking at Forex Factory. By the way, in case you don't know this by now, Forex Factory is what I look for and look at when I'm making my decisions on what is in front of me that I need to pay attention to. This right here, crude oil inventory report. You really don't want to be trading in front of this. But today was an exception to this general rule with the event. but I also knew that I wanted to be clear of the trade before the inventory report came out. And let me tell you why. So here's the event coming in at 9:17. The market is, let me pull this back so you can see what it looks like prior to this. So we're just humming along here at 8 o'clock, 8:05, 8:07, da 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 da. Nothing's going on, nothing's going on. And I'm just drinking my coffee, listening to a video, listening to music, listening to Mozart, whatever I'm doing, whatever you're doing. And I'm just, just watching da 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 da. The market goes down. Well, that's kind of cool, 9:02, 9:19, 9:15, and all of a sudden, hopefully you can see this bar. Let me get the arrow out. Now, my right edge would show it a little bit further, but I want to make a point. Can you see anything different in this bar in volume than anything else that you see? This is the key. Those that have watched me, right there is the key to victory. Knowing what to do with that trading bar. What you see right there will make or break you as a trader, in my humble opinion, as a day trader. What do you think that you should do off of that trading bar? Should you be selling it or buying it right there? Or should you be sitting on your hands and waiting? I actually answered my own question, right? You should be sitting on your hands and waiting for an opportunity to present itself. This bar comes on the chart, and this is 9:17, okay? 9:17, and this volume bar comes in at 25.22. 5-second volume, 2,522 contracts are traded in 5 seconds. That's significant. It's a skyscraper. It's an HVS sky that I talk about. It's the highest. It's the like the sore thumb that sticks out like everything else that's out there. It just sticks out. And if you can't see that, then you need to stop trading until you do see it as a day trader, in my humble opinion. Until you can see this come on your chart, you should not be trading. So this is money in the bank. When I see this, I'm chopping at the bit. I am super duper excited, just like I was Tuesday of last week when I jumped the market. I saw a 23.90 bar, but I got in too soon, and I just accumulated errors, and it was ugly. And I went down max daily loss almost on that trading day. But that was an event that come through 23.90 bar. It comes in, and just like this bar, but today I trade it properly, and I'm patient and I wait. So the first thing that happens, this right here, let me go just to here. So what do we see? We see that we run through this S1, since this is support and resistance, and we get really close up here to the pivot point, right? Now, this looks like, wow, that looks like that took a long time to go from there to there, right? No. Can you see the time period down here? 9:17, 9:17. This is what I'm talking about velocity in the trade or velocity in the market. This is velocity. When you start seeing 1-minute bars moving this fast, this quick, there's a lot of money being exchanged right now, right here. This is an event. So the first event comes across, and right here you can see that this right here is where I was looking to short underneath it, right in this area, and I had a sell order, and the very first sell order I put in was at 41.38, and you had to know exactly what you're doing, right? So I was at 9:17, 9:16, 9:17, and I had already known that I wanted to be short at 41.38. Now, was I filled? No. Once it busts through this minor resistance area and goes through the pivot, I X out of that trade and I flatten it. I take out of it. I was not filled. And then I'm waiting. I'm waiting for something else to happen, right? I'm still looking down here at volume. This is still the highest volume bar all the way across this board going down. And when I'm looking at 1, 2, 3, 4, 5, 6 big high blue bar volumes, and then I've got only 1, 2, 2. Well, I guess if you count these two, it's 8. 8 against 4. Let's just call it 8 against 4, blue against red. So I humbly believe that this is shorts covering, or long covering, or weak shorts covering, weak. As the market moves up and through, it's weak shorts covering. So it's moving through here, and this is all a manipulated move based upon this right here. This first area was people that were short, and they got filled here. And right here are people that were short, and they got filled here. And right here were people that were long, and then they started getting filled here, and so forth and so on. That's just the way I view it right here. I look at that as shorts covering again, and right here is shorts covering again. So it's short covering along the way, or stop running, as I like to call it. So the participants are running stops. If you ever heard of the concept called running stops, this is what running stops is all about. Now, the event and the golden nugget that I want to give you today was right in here. This bar is my decision bar. What I did is I bracketed off the trade. Now, until you can see this, I would humbly recommend that you want to make sure that you're in a sim before you take advantage of a trade like this, because this whole move and me getting in right here at 41.79 today is 9.19 from the moment of this trade happening, 9.17, to me getting in the trade at 9.19. That's only 2 minutes and change that expired on my clock when I got into the trade. And I was looking to go short this whole time, all based upon this one volume bar right there. Now you might see this sore thumb sticking out right here, right? Yeah, me too. I saw it too when I first got filled, and I'm thinking, oh great, I'm going to get stopped out real quick, and the market's going to take me down $220, and I'm going to be even closer to my FTP stop loss. But it ran through. It ends up being at time of trade in of the session, this ends up being the highest volume bar during the trade, and this is why I went long at the inventory trade. This bar right here influenced me to stay long or try long a couple times, one for a loser, one for a winner. But the trade itself that I took advantage of is I watched us blow through the pivot area. So I knew pivot was irrelevant at this point. You can throw away all support and all resistance when you're looking at an event type of thing happening. So I come in here, I short here, I watch it come down here and bounce, and I see this red volume bar come up right through here. So I see this one, and then I see this one. This is where I pulled my stop in closer. First off, I pull my stop right above this line right here. So right, I'm here, the market's moved down, and I'm already right at this area right away. And then when we got off the S1, I used the S1 bounce. So this is, what does support become? Support becomes resistance, right? And resistance becomes support. This is support. This is support acting like support. I looked at it bounce off support, and I covered. So it got close to it within a couple ticks, and then I went ahead and covered. Right there, I flattened out the trade, and I took whatever I could out of it, and I closed it up. And that is the event trade. That's how I play an event. It's not a long base trade. I'm looking to maximize out profit in a very short period of time. And it's those fun trades that would just I would watch them go by and think, how can I trade that? And that was one of those things that I put into my trading system or my trading method. And it's one of those things I teach. So this is the event, and hopefully that is kind of one of those golden nuggets that you'll start seeing, and then you'll start being able to trade it. So we traded through pivot, we traded through, and then eventually we go through S1 and S2 during the trading day. Looking at the overall trade here, I'm covering before 9:30. Why? Because today was the crude oil inventory day. Remember I talked about that? You don't want to be, this is, as a crude oil trader, you do not want to be, and a day trader with a small account, you do not want to have a trade on during inventory. You want to be flattened out. So I flattened right here at 9:19. I waited for 9:30 to come around. I went and refreshed my coffee. I waited for 9:30 to 9:31. I saw this was the highest red bar. And then this bar right here comes in at 9:32. And I'm trying to get long. So I try to get long here. And it was worth 1p, I believe. I get stopped out at break even, I believe, right here. Because I was looking for this market to move a lot further than this right now. So it makes it up 1p, and then it comes down and takes me out. The second trade, I think I took 11 tick hit to start with right there. Yeah. Right here, I take a 11 tick hit, or I get back in, one or the other. No, I get stopped out to start with right here somehow. And then I get into the trade, and then it stays in it, and then I get, anyway, so this area right here is where it was covered. And then where I saw was prior support becomes resistance, and prior resistance becomes support. What I saw, believe it or not, and I know this because I saw it, I thought right here would be a good point to sell this market, right there. Right below the 200 bar SMA, right in this area would be a good area. And by the way, this would not have driven you out, nor would this have driven you out. And look at that nice downward move down to S1, and the 200 bar keeps you in this trade, keeps you in this trade, keeps you in this trade. Maybe you get stopped out here, maybe you don't. Keeps you in this trade, and right here, roughly at 1:34 in the afternoon, at 40, you'd say 40:07. So there was a nice downward movement, and people ask me why I keep this blue line on my chart. Well, that's why. Because eventually, sometimes you get lucky, the squirrel gets the nut, and you're able to trail your trade underneath this very, very clearly, very, very nicely underneath it. And you look at this 40.95 to 40.07 was that 95 less 07 was an 88 tick move that was available in the trade itself. And even if you didn't see it here, you certainly should have seen it here going up through this area, and then you would have been able to take advantage of it maybe from this point, which would have been just as fine seeing it right here. So this would have been a little bit more clear of an area to see it and make a move. And if you didn't see it here, then maybe you saw it here. But this would have been the area that I would have recommended, and I did recommend, and was we talked about to the coaching people that I coached, the two that I've taken, well, I have a spot available. The two that I've talked to, this is what we talked about. This right here would have been your sell mark, to sell this mark right here, either here or here. I recommend that you would have sold here though. And that would have been based upon looking back at what was going on prior to this. All right, and that's for a different time period, for a different course into intermediate, into some of the advanced stuff. And then, oh, by the way, the intermediate course is going to be dealing with what I call the 3 V's of trading. We're going to talk about more on volume, more on velocity, and more on volatility. And then the advanced course is going to be taken advantage of how do you handle multiple contracts up to a 10 contract series of contracts. So as you're planning out your 2016, think about that. The second week of January, the intermediate course, we're going to be handling the three most important concepts of trading: volume, velocity, and volatility. I call it the 3 V's of trading. I want to stop screen sharing. So let me stop and get myself back on the screen. Do we have any questions? Any questions at all? Now, there is one spot available in the coaching program that I put together, the Black Friday. And if you contact me today by email and you really want to get involved in it, then I will honor Black Friday's pricing. Either Wednesday or Thursday, whenever I get to it. It's going to be it's at $997 with 50% discount, $500 off it. It was at $497 for that coaching program to put together. The other side of that is that come either probably Wednesday, Thursday, somewhere in that area, that same spot is going to be at either, well, it's going to cost more money. Probably $777 is what I'm thinking right now. So if you want to take advantage of the $497 instead of $777, then you've watched this and you watched this far into the. If you watched me this long, you should be in it. I mean, honest to God, if you watched me this long, you should be one of those guys that or gals, the 5% gal that I track. You should be one of those people that take me up on my course and get to the next level, and get it at the discount, because it's never, ever, 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 ever going to be this low ever again. So $497 is as low as you'll ever see me one-on-one day trading, coaching, helping you get to the next level. It just will never happen again. I promise you. I cross my heart, hope to die. You'll never see it. I'll never put it out there again. You didn't see me put a Cyber Monday sale out. You didn't see me cut any prices any further down. It's never going to be any lower ever again. So $497, I will honor it only for today. When the clock strikes midnight tonight, if you're not in my email box by midnight tonight Eastern Standard Time, it's gone. It's off the board. So, but with that being said, who knows? Maybe I make an exception for you if you plead your case with me. Any questions? Any questions whatsoever before we wrap it up? I appreciate this was the end of the beginning futures day trading course. We had a lot of fun. We had a lot of great questions. Is there anything out there that is on your mind right now that you would like to have a further answer to? So we covered a lot of material, and I would recommend that you go through it and look at it more than once. And it's some really good quality, high quality H2O that I gave you, a water boy reference that I gave you today. So, and over the last 4 trading Wednesdays that we went through. So the last 4 Wednesdays that we went through this course, it was a lot of fun. I enjoyed putting it together. I look forward to putting together my intermediate course into the near future, roughly the second week of January when I put it out. I will make an announcement of that course probably around a little after Christmas, most likely into the new year, and we'll get that rolling and started. I would say roughly around looking at January. It either will start on the 13th or the 20th of January. So another Wednesday, 3 o'clock trading. That works best for me in my time frame that I have. All right, I've got to run. I got a 4:30 meeting that I've got to get to, and I would say if you have any questions, fire it to my email. God bless. Take care. I enjoyed being here today. I enjoyed working with you and getting you through this beginning course. I look forward to seeing you on our next course. Take advantage of our coaching program that I have, my coaching program that I have. I will most likely honor that, whatever, for the week. So if you do get to it later in the week, I'll probably just honor it anyway. So money. Well, money's cool. I like that, and buy maybe a gift or two that I need to, or pay my internet marketing coach that I'm getting ready to talk to here in the next couple of minutes. All right. God bless. Take care, and we'll see you on the next live course that I put together. Take care. Bye for now.